MF Global fights for survival with rumors of bankruptcy swirling around the company. Japan intervenes in the currency market, pushing the dollar up as much as 5% versus the yen. And central bankers gear up for a busy week with the Fed, ECB, and G20 prepping for policy meetings. And the S&P is up almost 14% in October. Are markets overbought, or can this rally continue? I'm Alix Steel, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the morning call. Scott, let's get to it here. S&P up almost 14% for October, the highest level since 1974, but futures down about 13 handles here. Is this a normal pullback on overbought conditions?
What's funny is if you read the papers all weekend long, you had skeptics come out, you had everyone saying the devil's in the details, it's not going to work what they did in Europe. You know, we have so many obstacles here in the U.S., the super committee, the G20. But all you had to do is put a little common sense. Like you just said, we had a huge month into big resistance. So why not pull in a little bit? Why not correct? We're down 13, 14 handles. We're down like 1% after a 13 to 16% move off the lows. So it makes sense.
So let's look at the retracement rules we're going to see what is a normal correction and then what would signal something a little bit deeper, a little bit more painful.
That's exactly what everyone should be doing. They should be seeing what type of retracement we have going into these events this week. Is it the same that we've had over the course of the past month, or does it change? Does the speed change? Can you buy a shallow retracement, or do you have to wait a little bit more? Because recently you had to just buy every dip very quickly, and you didn't get the areas that you wanted. So let's outline some of them right here. I'm going to go with the spiders because most people out there buy the spiders or the indices versus the S&P. So we did get a move up to almost, this was almost 129.42. You have your low here, so this was really 1074 on the S&P. This was really about 1292. So if you do that same type of fib retracement, which we've done this entire way to measure the type of retracement we will have, you go here and the 25% retracement comes in right around 124. So as high as 129 to 124. It also kind of lines up with the last little breakout that we had. I do think that we need to look here first. This was the beginning of the gap that we did on that Thursday after the European news, which is around 125.96. So I would say right around 126, I would start taking a look. If you did short up here, into trying to be cute, I would say cover around this 126. And if we could start pulling down into this 124 area or 125.50, this would be the first area for a dip to buy.
All right, also let me point out some really cool stat from Bespoke that said that 17 times over the past 20 years where the S&P has crossed back above its 200-day moving average after having not done so in the prior 3 months, the index has really struggled the week after, about down almost 1%. But over the next 3 months, the S&P gained on average about 5%. So that definitely also speaks to sort of a healthy pullback, but then consistently sort of treading higher over the medium term.
That makes sense. It means that we just had a big move.
Right.
You have to have a little consolidation. You have to let some people in. You have to digest the gains. So for those antsy, maybe they won't this week. You'll hear all the skeptics. But if you stay the course and if we follow those retracement rules and we hold higher and we stay just say above 1240 to 1255 in the S&P, we should see new highs in the year. You just have to be a bit more selective because we just had a big move.
Also, I read from a note from Deutsche Bank over the weekend that said for the first time since December 2010, speculators turned net long in futures from net short. So also maybe an extra pop from short covering isn't in the cards for the short term.
Right. So that fuel isn't there. Right. That means you need natural buyers, which are also harder to find versus people just covering their shorts.
All right, so let's get to the specific sectors and what has more juice. Specifically, I want to talk about the banks because they were probably the most battered and bruised. So where does this index really need to hold for the XLF?
What's great about being a trader or an active investor is you can take a battered and bruised sector like the XLF, not be caught in it because you use your sell rules and get that bang for the buck off the low. And there was a huge move off the low. A lot of these banks paid you if you timed it. So if you look at the XLF, the first time I talked about it, really important, was right here when we broke above this 1230. So if you look at the chart here on the XLF, this was the reversal. This was on the chart. If you take a look here at the XLF, you'll see that it reversed like the rest of the market. But then you had a nice push through this downtrend. Went into some resistance, and then you had a little corrective type action. This is when JP Morgan came out. This is when some people said that's it. It's just the same type of bounce that's not going to be sustained. So if you look here, that was important, this 1230, and then we went again. So now on the XLF, I would like to see this upper flag hold, but it doesn't have to. The low here is about 1368. I would say as long as it stays above this 1320, it's going to remain intact, and we should just look at some stocks that we could use as a gauge, because I think, Goldman Sachs was a great one, that we talked about last month. We said if Goldman Sachs can get above 98.50, it'll be very helpful, and then maybe even above 104. So if you look here on Goldman, it was a great gauge. This was the 98.50 right here. We spoke about it many times. This is when that downtrend broke, okay, for a good trade, and then it went sideways nicely, and then it actually gave you a secondary move. It broke above this 104. And now you're at resistance again. So for Goldman Sachs, I would watch as a gauge for all the banks, 110. And then it could shake the tree, come into this gap, and really get to 107.50. So this is your buy zone in Goldman Sachs, and this is a zone that should hold if these banks are going to pull in and go.
And then real quick, I want to go to the XLI, because they were also really industrials. They were really beaten down, but had a nice almost 5% pop last week. What's kind of the line in the sand for that level?
Okay, the XLI, great move. Industrials did really well off the lows. If you look here, this was the day the market bounced, came really quickly back to resistance, held right around and blasted through. I would say, again, to be consistent, look at the gap. This gap here is around 33.69. This would be meaning like really strong. If it holds this flag type pattern and then goes sideways and goes again, that means we're in super duper strength. But I think we could even come in a little bit there. I'd say as long as the XLI holds above, just say about 32.50, I think the momentum is strong there, and you can stay with that trade.
And totally on the flip side here, I want to go to retail. I was reading a note from Bank of America, Merrill Lynch over the weekend that said that retailers are positioned to rally sharply over the next 5 to 6 months, and that's on top of a really strong rally that we've seen. We were looking at the charts before we got on camera of like the Deckers and Under Armour that were performing really well. Is there more juice left in the sector in a chart technical example?
The RTHs were the strongest, but then they paused towards the upper end of its resistance, which is fine. And then it let other sectors play catch up. You did have stocks making historic highs or new move highs like your Deckers, your Under Armour. So if you're an investor, congratulations. You didn't only have to just time something off the lows like you had to do with the banks and the industrials. This actually is paying people to sit. So if you look here at the RTHs, you'll see, this was remember that little short-term top I pointed out? Well, it led to a bit of a correction or a bit of a pullback, but held support. But look where we were. This was right at the old highs. So not just to move off the lows like in the banks, but back to the highs. So I would say as long as the RTHs hold above this, 108-ish and go sideways, I think it's in the game for new highs on the year. You do have a nice little flag here, but I have a feeling it's going to not resolve until at some point, maybe later this week.
I have two more sectors I want to hit on. We don't have a lot of time. We want to go to tech, nearing 52-week highs. Do you think that tech also needs kind of a breather here?
Yes, tech also was leading the move, came back to the old highs. If you look real quickly on the Qs, you will see that right back to the old highs. Still holding in really well. I would say for the Qs, for the composure to stay intact, 56.38, and then at some point, if it could continue to hold higher. But look at this move it's had, so it might pull in a little bit. It will make new highs in the years. I still think retail and tech are the two groups that could make new highs in the year first.
Now, what about oil? This is what I want to round out with here, because oil prices are slightly down today, but I did read that Bank of America note that said the WTI prices could hit $105 per barrel in the short term. Also, if you look at the futures market, we're now in backwardation, where the current spot month is higher than months that are further out, which means there's a supply crunch and people are willing to pay up. Couldn't that be a short-term boost, even though the markets in general are kind of selling off today?
Well, the refiners and the OH fast and furious move off the lows. That was one of the groups you had to time off the lows, not a group showing relative strength, but if you timed it, you got paid. They had almost bigger moves than some of the leaders. If you look here on the OAHs, you'll see, we've talked about this many times, here was the reversal low, and obviously that pendulum swung from here all the way down. It was definitely oversold, but you didn't really know that it was more than an oversold move until it really broke above this little downtrend. Hovered above it, made a new move. I would say here, for this, in order to be healthy, I would, 121, it should not break below this area. For it to be powerful and really strong, it'll hold this gap. And as you can see on the consistency in all these charts, we have a big gap that happened last Thursday. That was on the excitement of the solution or a little bit of the plan of the plan, whatever it was. So that is your first level to watch today. If we get into that gap, then you start using those retracement rules. All
right, we'll be right back with some stocks making 52-week highs and what to do with them, as well as some quick ways to make some cash. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here with stocks making new 52-week highs or kind of trading around that area to see if on this pullback today it adds some good long-term value. Want to start with IBM. I know you and Stephanie Link talked about that last week. Like a stone throw away here from 52-week highs. Would you be adding?
This has been one of the better stocks out there, the mega caps that have definitely rewarded investors. You didn't have an earnings shortfall. It just moved too highly going into it. It's held this uptrend. If you take a quick look at the chart, I think this is a candidate for new highs. If you were in tier 1, maybe you got back on this gap and it held here to tier 2 or even here. Now I would say, stay with tier 1. At this point, traders are going to watch if we can go sideways and continue to hold this uptrend. Perhaps we get a new high trade above this 190, but I do think this is an investment quality stock that'll make new highs this year.
And SanDisk really had like a blowout move there. Is it going to really run out here? I mean, you can't chase it at this level.
No, at this point, you can't own enough SanDisk. We talked about it at this level on the chart a few times, a lot of times. Okay, this was one of those that I was like, why is this so strong? So instead of trying to figure it out, I just bought it. Anyway, this was your high or low. This is when it traded through 44.50, and now it's it's actually through the highs. So congratulations if you stayed with this one. I do think you can't chase it now. Let's see if it can hold 50. If it gets into 50 and you want to be a long-term holder, that's a spot. It shouldn't break below this 47.
And Visa in particular also at 52-week highs, but if banks falter here, it could drag on Visa.
Yeah, but we've spoken about this one too, holding higher above all the moving averages, showing relative strength. This one, you didn't have to just buy off the lows like the banks. This stock, I would pick one Visa or MasterCard, own one of them. It's good for your portfolio.
And then two other stocks we want to hit on. Chipotle, according to Capital IQ, is the 5th best performing stock of the S&P for the entire year, and Cabot Oil and Gas is number 1, up 104%. Do you think these two names have a lot of juice? We don't talk about Cabot that much.
Not really, because I don't pass that line every day and see it around the corner like you do at Chipotle. So I have to travel to one of those whatever it is. But anyway, we'll get to that. CMG stock looks really good. Everyone loves to hate this one, but it is one of those momentum names that has a high multiple, but it continues to deliver. You see an upper flag right here. This was a great little buy pivot over 320. Now it's flagging here. If you're an investor, I think you stay with it. If you're a trader, you can look for it to clear this area, which is about 345, above 345. This thing could be 360 in a whisper.
And what about Cabot Oil and Gas? What's that level? That's interesting.
Let's take a quick look here. This had a really nice move last week. Okay, two big days. It was above the moving averages. It was a candidate. It gapped above it, which added some power. I'd love to see it like pause here, because as a trader, you don't want to see it just blow through it. But if it could stay up here in this area or definitely hold this gap, you're going to see a new move, I would say, with momentum above 80.
All right, let's get to some other stocks. Quick ways to make some cash. Apple, what is the next buy level here?
Apple's been putting in like an inside base. It's not leading the markets, but I think people are giving it a bit of a pass, saying, listen, they're digesting the passing away of Steve Jobs. They just missed their first quarter. Let's see what it leads to. For a trade, there's a decent setup coming in here. Okay, I'm long a little Apple. I want to see it trade into this earnings gap. I want to see it fill a big portion of it. When that happens as a trade, it's exciting, because there's an air pocket here. So if it gets above this 409, you could see a quick move to 415. So that's great for cash flow. Starting to get above the moving averages, still held to 50. I would say if it gets back below 398, it'll lose some momentum. But just real quickly, I want to show you why I like this trade. Look at Amazon. Amazon missed on numbers, held this area, but look at the nice trade you got here when it went above this 208 to fill a gap. This was a $10 trade with limited risk. That's why we like when stocks try and fill their gaps, because it moves fast.
All right, let's go to TravelZoo. Talk about filling a gap here, up like 6% on Friday. Is there more of a trade for you?
TravelZoo, a lot of sell-side guys call me saying, listen, if Groupon comes out, the valuation they're trying to get, look at Tzu. It's got a tight pattern. There's a good entry here. It could get attention before this Groupon goes public. So if you look here at Tzu, I played it years ago. It used to really move. But at this point, this is a nice chart. I'm long a little bit. If it starts to get above this, just say 34 area, you could see a nice squeeze up to almost 40. This would just be not really for an investor, more for a trader.
And what about LinkedIn, staying in the same kind of internet space here? Reporting earnings on Thursday. Is there a trade before the print?
Well, hopefully they break it through the levels before the earnings, so this way we don't have to take it into earnings, because you know how I feel on that. Nice buy pattern. We had one around 88. Now this 95 is a new little line in the sand. If it can get through 95, this float is very heavily shorted. I think you can get some power. You can get a nice move real quickly back to 100, if not higher. So I'm actually long a little bit of this too. gets through this 95, you could see some power. This was the last time we listed it when it went above this area. So nice
also
setup.
Because the trader's going to really take it short into earnings?
Not short into earnings, but then if it doesn't clear this area,
Then
then if you want to buy it in that area, you have to hold it through earnings, which just makes it a bit more risky and trickier, especially for LinkedIn.
All right, now want to round it out with gold here. Finally had its big rally last week, up over 8% in just almost 8% in just a week. Saw some mild profit taking on Friday. Gold's ticking down today. That's solely because the dollar is really strong after Japan intervened in the currency market. Do you like it? Do you like gold here now?
Last month, or last week, there was a nice tradable setup. We've talked about saying tier 1 no matter what, not tier 2, but there was that trade for guys that don't just hold things long term. If you look at the GLD, you'll see this is what we were talking about. Look how easy this was when it cleared this little downtrend. You had a nice lower level downtrend. It cleared right here. So this was your buy, and it's giving you some nice follow through. So at this point, I said it could fill this gap, I think on Friday, but it doesn't have to. I would rather be a buyer of these GLDs right around here. This would be a nice little pullback to about 166.50 after a nice tradable move above this 162.
And I am hearing some technicians kind of revise their forecast for the medium term and short term. Sort of, yeah, we'll see a little bit of consolidation, but not that 7-month consolidation I think a lot of people were looking for, and that we will tread higher. So that's something to look at too when you're buying.
Yes, and silver actually had a nice little trade in there too. It moved with gold, but it's not the quality like gold is.
All right, that's it for us for right now. And of course, the one thing everyone's going to be looking at for the whole week is jobs, kind of like floating around the back in your brain, right? Is there any safe way to sort of prep yourself for the number, or just need to see how the next couple days really play out?
The only way to prep yourself is by having these levels in front of you on the S&P for retracements, because you have Big Ben coming out on Tuesday and Wednesday. Then we have the G20 on Thursday, Friday, and then you have jobs on Friday. So if they
and ECB on Thursday.
A lot. So if they bring us down beforehand, which it looks like they're going to do, I think you could buy into those support levels. One of them being that 1250, 1255, which is that area, and then you have the 25% retracement. I believe it was 1238,
yep.
And that 1238, if it holds, or if who knows if we even get down that far, but that's a key level to watch. And obviously all those gaps that we saw from Thursday, see which ones get filled, which ones don't. The ones that don't get filled are showing you power. And the ones that do get filled are still fine. They're just not as strong.
All right, so don't freak out today.
Yes.
I think that's definitely a good
Go out for Halloween.
Here.
Have some fun with your family. Get dressed up. If you're single, it's always fun going out on Halloween. Girls seem not to, they always dress like a frisky cat or something.
And we'll be done for today.
Exactly.
That's it for us for today, everybody. Happy trading. I'm Alix Steel from the street.
And I'm Scott Redler. See you at the recap. Have a great day.